Hello investors, this is Mutual Fund Guruji and today we'll be talking about mutual funds. What is mutual funds and why to invest in mutual fund schemes. So moving further, I'll explain you what is mutual fund. Mutual fund investment is basically a pool of money accumulated by the investors like us who have a very little or no knowledge about the stock markets, and also for the people who have a knowledge about markets but do not have the time to track the market and to trade in the market. The amount accumulated by the investors is then invested by the fund manager in stocks, bonds, government securities, debentures, and various other assets available for the investment purpose. So the allocation to all these stocks, bonds, and other securities depends on the type of investments and the type of funds the investor is choosing. And also, it depends on the risk appetite of the individual. Moving further, I'll be talking about the structure of the mutual fund. So, why I'm talking about structure of mutual fund is to give away the fear of people that if they invest in mutual funds or capital markets, their money might not come back. So, moving further, sponsor, I am taking the example of Reliance Mutual Fund House here. So, the sponsor is Reliance Capital. So, sponsor is the promoter of mutual fund and it brings in all the capital investment for the company and set up the an asset management company. Moving further, the trustee, Reliance Capital Trustee Company Limited. So, trustee is a firm which holds the asset for the benefit of the investors. Next is the custodian, which is the Deutsche Bank for Reliance Mutual Funds. Custodian is basically a financial company or bank which holds the security owned by the mutual fund houses. Next is the asset management company. This is the company which will invest the amount accumulated by the investors in the stock market, government securities, and other assets to generate the higher returns, which is Reliance Capital Asset Management Company. Moving further is the RTA or the registrar and transfer agent, which maintains the detailed record of the transactions of the investors for the convenience of the mutual fund house. Next is I'll be talking about the history of mutual fund, how it evolved with time. In 1964, there was only one mutual fund house, which was UTI, and which was governed by the government. Then in 1987, the public sector banks get into the business of mutual fund and they started their own fund houses. In 1993, the public sector private sector banks get into the picture and they started their own fund house like ICICI, HDFC, Reliance. These are the top private fund houses of the country. Next is in 2003. So since 2003, this industry has took a very good pace and the investors started investing the money in mutual funds, and since then it is growing at a very good pace. Next is the type of mutual funds. So, on the basis of structure, that means on the basis of the schemes, open-ended scheme, closed-ended scheme, and interval-ended schemes. Open-ended schemes are very popular, and maximum people invest in the open-ended scheme as there is no limitations to which at what time you can purchase the mutual funds and at what time you want to exit the mutual fund. Whereas in closed-ended schemes, the time horizon is fixed and like for 5 years, 7 years, 10 years, an investor cannot take out their money within that time period. For example, if you invested in a scheme with a 5 year lock-in period, you cannot take out your money before 5 years. Next is the interval schemes. These are not very popular nowadays, but it's a combination of both open-ended schemes and the closed-ended schemes. In this, the investors knows when they can exit and when they can re-enter in the mutual funds. Now, I'll be talking about the types of mutual fund on the basis of investment objective. So probably this is the most important slide in this presentation. So first is the growth or equity oriented scheme. So this is very popular scheme and this fulfills the purpose of mutual funds. These schemes give the very high returns, can give you up to 50% or 60% returns. From 15 to 60, 65% returns you can uh, get in if you invest in these kind of schemes. Whereas the other scheme is income or debt oriented schemes. These schemes are less risky as compared to growth or equity oriented schemes, but the return will be less as compared to the growth schemes. Next is the money market or liquid schemes. These schemes are basically for the short term investors who want to invest their money for 1 month, 3 months, 6 months. So to park the money for a shorter period of time, we'll recommend our investors to use and to invest in liquid schemes. Guild fund schemes is again similar to the income or debt oriented schemes, in which in this the fund house will only invest in the government securities. So the returns will be less, but your money will be safe. Next is funds of fund schemes, which is not very popular in India, but if you see all over the world, funds of fund schemes are doing really good. In this, one fund house will invest in other mutual funds to generate the higher rate of returns. Next is the floating rate of funds, which is not there in India but is traded all over the world, and it is not very popular, so we'll not talk about this. Other schemes like tax saving schemes, so everybody might have known the tax saving schemes. So mutual fund gives you the option to save your tax under 80C. So this is probably the best investment one can do to save the tax, because in this there is a lock-in period of only 3 years, whereas in other 80C schemes the minimum lock-in period is 5 years. And if you compare the returns of tax saving schemes under mutual fund ELSS with the other conventional 80C tax saver schemes like 5 years fixed deposit, PPF, PF, and other things, the returns will be much more higher in the longer term. Next is the sector specific schemes. This schemes is basically for the investors who want to invest in the particular sector. Like I am very biased towards the banking sector and I think it can do good, then I will invest in the scheme in the mutual fund which only invests in the banking stock. Next is the index scheme. So if I want to get the returns of Nifty, I cannot trade it directly in the market. But mutual fund houses gives you this option that you can invest in the index scheme, in which they will replicate the whole index like Nifty, Bank Nifty, and other index, so that you can get the returns equivalent to the index. Next is the payout schemes, dividend payout schemes. So in this, we recommend these schemes to the people who are around 55 or who are already retired, who need regular incomes. So we recommend these schemes to them so that they can take out the dividends of their investments they made in the mutual funds. Next is the dividend reinvestment scheme. This is the most popular way of investing in the mutual funds, because in this whatever you are earning is getting reinvested in the markets, and which will fetch you more returns and you can enjoy the power of compounding. Moving further, I'll be talking about the types of returns you'll get in mutual funds. It is same as the stocks. You can get it in terms of dividends. Again, this is for people who need a regular income, who have already retired and who don't have any source of income. So we recommend dividends to them. Capital gain is the value of your investment at the time when you sell it. So capital gains will give you the power of compounding, and which will not increase your wealth but will multiply your wealth. So we recommend capital gain instead of dividends. So the most important part of this presentation is the advantages of investing in mutual funds. There are hundreds and thousands of ways in which you can invest and you can get the returns. But in this, the investment which you are making is professionally managed by the fund manager, which fund manager has a large number of people working under him or her, who will analyze the market conditions, who will analyze the sectors, and then they will select on the stocks on which they have to invest. So you will get the higher returns in mutual funds. Diversification is obviously the main point in the mutual fund investments. you're not buying a single stock, but if you buy a single mutual fund, then you will be buying a bucket of stocks like 15 stocks, 20 stocks, and even 30 stocks, 40 stocks. So which gives you a very good diversification. Even if one stock is not doing good, the other stock will perform in the market. Third is the liquidity. So the mutual fund houses nowadays are very advanced, and you can sell it, buy it online with no hustle, and your money is very liquid. Next point is the flexibility. The flexibility you have, that you do not have to trade the mutual fund during the market hours. You can trade the mutual fund any particular time of the day, and they will be reflected for the next working day and the next market rates. The NAV will be calculated on the next market working day. Third is the cost effectiveness. As I told about diversification, if you buy 30 stocks in the small quantity, then you will have to bear large amount of brokerage and other charges associated with the demat account. But if you buy it with the mutual fund house, they only have 2 to 2.5% as the expense ratio, which is very cost effective. Next is a very well regulated market. So mutual fund nowadays is very well regulated by SEBI and the MFI. So your money is very much safe with the fund houses. Next is the transparency. Now, when the world is moving to the digitalization, you can track your investment every day, every time, and you can sell it, buy it online. There is a lot of transparency on the charges what they are putting on. That's all in this video. This is my first video, guys. If you like it, please hit the like button. I'll be coming up with more videos and how to invest online, how to invest through distributors, and I'll be analyzing few very good mutual funds in which you can invest for next 3 years, 5 years, so that you can accumulate and you can multiply your investments. Thank you so much. Hit the like button, subscribe to my channel, press the bell icon so that whenever I post a new video, you get notified and you don't miss on any opportunity to make money in this market. Thank you so much.